Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. You didn't come here for the lies. You certainly didn't come here for the kittens. You are here for the truth. You've watched as this bear market has unfolded one by one. All the dominoes have fallen. I'm going to show you everything that you need to know. I've got timestamps below. I want you to see this first. The S&P 500 pairs losses after hitting bear market territory. Take a look right here. I mean, come on, my goodness. It fell through. This is the day as we see it. Comes right through and then finds its way upward, just barely into a bear market, and then pushed up. Perhaps the plunge protection team, perhaps those who were buying the dip. But you know all along that we have seen some serious weakness. These are the four broad US indexes, starting with the S&P 500 on the left-hand side. But they're all the same direction. We have noted this not just in one industry, not just in one sector, not just with one stock, and it seems to be everywhere. It's pervasive. There is bearishness. Even if it's not technically in a bear market for some, the bearishness is there. Where does that come from? I think it's pretty clear, but for those who don't know, you can see that the Federal Reserve has pulled back support. What support are we talking about here? Moral support? Well, kind of. But ultimately, what we see here is that they've reduced the amount of money they were printing. That started freaking the market out until we got to the point where they didn't add any additional funds. And that's when late last year in 2021, where things started to get real weak. And then, of course, we saw that they increased interest rates, and the markets did not like that. You had all of the analysts who were suggesting S&P 500 was going to be at 5,000. It's going to be at 6,000. It's going to be at 10,000. Can I get a 20,000? But anyway, to be serious, looking at this, you see the analysts changing their mind real fast. Stocks pared back losses to finish flat. Okay, you looked around, the markets got real overheated, then they got real weak, and now we are in this situation today. They talk about, all these things that I've been covering. You could see it for yourself, but I think everybody knows what's up. Major outflows hit most asset classes as recession woes mount. Bank of America indicator flashes contrarian buy signal for stocks. And that's what I wanted to get into here, because it's when we are most bearish that often that's time when people should be buying in. How can we really know, though? Ultimately, we don't. One of those indicators happens to be Bank of America having this, contrarian indicator, and you could see other ones. When you see what we have with the amount of puts that are being put on, essentially the amount of retail investors buying bets, putting bets on that the market will fall, and that gets to a record, at least within that cycle, usually that indicates the market will go in the opposite direction. It's funny the way it works. Usually the retail investor, when they become the most bullish, that is often a signal that things will fall. And then the reverse is also true. Investors fled most major asset classes in the past week, with the US equities and treasuries a rare exception to the massive exodus amid concerns that tightening monetary policy will push leading economies into a recession. And although we're not there yet, everybody seems to be talking about the same thing. Recession. The R word is starting to get real popular. Not there yet. S&P 500 sell-off may have to broaden further before the breadth shows a buy signal. So you can see that this is the percent of members above their 200-day moving average. And we're not there yet, but almost. Okay, so there are so many indicators you could look at this. Fed fear, hawkish central banks are now the biggest risk for investors. And according to the Bank of America Fund Manager Survey, which I talk about all the time, they believe that hawkish central banks, and then number two, global recession, number three, inflation is the biggest tail risk right now. 3,600 is the new bull case. Can you believe that? Bank of America saying 3,600 is the bull case. So where do we end up at this point? Well, I could tell you, if you want to know, you should be following the Federal Reserve's balance sheet. This is comparing the S&P 500 to the balance sheet, and as soon as they stopped adding money, like I said a few minutes ago, the market starting to look real weak, didn't it? Reaction function, financial conditions tightening at the fastest rate in decades this far into a hiking cycle. That's the black line, financial conditions index. And isn't it interesting that despite the interest rates are still very low, but this is not just about interest rates. There are many different ways that this is made up, and you see it having an impact already. US growth seen outpacing China's for the first time since 1976. Despite high inflation, the US is being propelled by strong hiring and consumer spending. I think it's also important to note that China has been locked down a lot, and that has been a major contributing factor to this. So it's both sides. Existing home sales fell in April to the lowest level since the start of 2020. You have to know what's happening here with mortgage rates rising. Again, the Federal Reserve's activities should be the very, right on the tip of where you're looking at. It must be right at the front of where you're looking. Okay. Surging dollar raises the possibility of parity with the euro. I brought this up, I believe, yesterday, the day before. That is interesting, okay, to say the least, because you do have a surging dollar. That's one factor. But you also have weakness in a lot of these currencies. Europe's economic misfortunes have sent the euro not far from equal value with the dollar for the first time in nearly 2 decades. So we could see this, though. You look around the world, everything seems to be, dealing with this. Every currency, it seems like, when you compare it to the US dollar. That's why I say for people, if you live outside of the United States, is there a way that you can earn US dollars? Maybe, earning money online. And that might give you, maybe it's a 30% boost in some cases to your bottom line. And you might think, well, it's all fiat currencies and they're all basically becoming worthless. Yes, but you can take the US dollar, actually add it up and then put that on something, invest in an asset. But for that period of time where you have to build it up, you could be, not losing as much, essentially. Because there's periods of time where you can't just every $5 you get, you put it into an investment. Sometimes you have to add it up. But how long does that take? Is that 6 months? Is it a year? What happens to your money in that time frame? I thought this was really interesting. CEO exits hit the highest on record as recession fears loom. Imagine that. CEOs exiting, and I'm looking through this, and you could see that it's not just exiting as in quitting. It's also they're being fired, they're retiring, and so on. A lot of, if you hear, by the way, for those who have never worked for a big corporation before, a lot of times retiring doesn't actually mean that they retired. It's basically to save face for the individual. They're trying to be nice to the individual and just saying, it's time for you to retire. Okay? Here's your package. Get the hell out. Okay, and they might have not wanted to, and they might need to continue to work, but that's what happens. So anyway, important point is that this is the largest on record, and I want to know what you think. Please put that in the comments below. Why do you think right now, 2022, the highest on record? Let me know. Let's get into the next aspect here. If you look around the economy, global economy, in fact, has been suffering clearly. And part of that is the fact that everything seems to be more expensive. And I wanted you to know about this. Natural gas imports from Russia under Gazprom's supply contract will be halted on Saturday, 21st of May. Look, Finland is dealing with this right now. They applied to NATO. Russia said, we got problems with that. And also, at the same time, this is about the rubles. So Finland said, no, we're not going to do the whole ruble thing. And what did they say? Okay, well, that's it. We're done. Cut you off. Finland loses main gas supply after refusing payment in rubles. This is extreme. I mean, this is extreme. I mean, yeah, it's been declining. You can see right here, Gazprom's exports to Finland in the past 5 years, but it's still significant. Okay, and my friends in Finland, if you are there, let me know what's happening. Let me know if this has a direct impact on the prices that you are seeing. It is extremely important that we talk amongst ourselves. Okay, this is a grassroots channel. This channel will never be the multi-million subscriber channel. I am not willing to spit out that garbage and just nonsense to people. People who were telling others, hey, oh, we're seeing Tesla at 1200, buy more. Tesla drops down. Hey, great opportunity to buy. Pops back up. Tesla at 1200. Hey guys, time to buy. Tesla goes down to 700. Everybody buy in again. 1200 again. And now we're down to 663. 663 for Tesla. They're telling buy every single time. Buy. But never to have concern. Never to say, you know what? Maybe this isn't so good, but maybe the fact that it went up so fast is a problem. Maybe all of these stock increases that we have seen is based on not on how many cars are delivered, how many, the business decisions are made, the expansion, hiring and manufacture, whatever it might be, not just Tesla. I'm just using it as an example. Maybe it's not about that. Maybe it's about the Federal Reserve's balance sheet. Maybe it's about central bank balance sheets. Maybe it's about easy monetary policy. Maybe it's about risk taking. Maybe it's about gambling. Maybe we should be looking at that and start to judge it from a different light. Look at what's happening today. Supply chains are never returning to normal. This comes from freight waves. And then you've got the riots in Iran. It's talking about the bread subsidies. They're cutting back. There's more to that, and I think you should read the article. I will have a link in the description below. But understand what happens. The earth will rumble under the heels of the angry mobs. And people, my friends, watch out. Watch what's happening to your neighbors. Watch what's happening to your friends and family. Watch everything closely because this world is erupting as we see it. Yeah, it's happening in Sri Lanka. Yeah, it might be happening in Peru or whatever around the world. We're seeing it. It's coming. If it hasn't hit you yet, it's around. It's moving. And understand what you can do. You have to prepare financially. I have an entire playlist called How To and Solutions. And for those who still read books, I know that's not too many. I wrote 2 books. If you want to read those, themoneygps.com, you can get that. And that's basically it. If you appreciate the information, hit that thumbs up button. I want to thank you for doing so. For those who care, reverse repo party. Let's just do it anyway. Okay, by the time you're watching this video, likely it will be the next day after I made a post about this on the blog or community section on my channel. I can also talk about this on Twitter. Look for it on Sunday, May 22nd. Let's have a reverse repo party anyway. We haven't hit 2 trillion yet. We're going to hit there. It's just shy of it. Reverse repo party. What does that mean? There will be a live event, the Money GPS on YouTube. Join it. Join me. Join my friends around the world. May 22nd. Post is available on Twitter, like I said, or on the blogger community section of the channel. I will see you there. Take care.